Vora as to what is it that one should be doing in this market. Mihir, hi, morning. Just when you think that the world's looking at peace, once again you have escalation in West Asia. But do you sense that the market is going to react to the same event differently should the escalation continue?
Well, it certainly can take a pause because there have been some events over the weekend, and in the last couple of days, we have seen oil move up quite significantly. Uh, coupled with the fact that the markets did do well in the last few weeks, so maybe it's just time for some kind of a breather. I think as far as the overall reaction of the market is concerned, I don't think there is need to panic because we've already seen these events before in the last 4 months, and the markets and the government and the system and the RBI know how to tackle spikes in oil prices. So kind of that learning curve has gone through. That's the reason why I believe the markets are not panicking beyond a point. So, but given the uncertainty, it won't be a bad idea to just take a breather for a while.
Mihir, hi. You're seeing more cuts for in the large caps, but the small caps and the mid caps are holding off at this point in time. Do you think there is this window where the earnings are better visible for these two sectors, and so the money will move into these sectors?
Certainly, the March quarter results clearly showed that the broader market does have a good amount of traction. The results in the mid and small caps were better in the March quarter. So to that extent, that trend on a stock by stock basis should continue. Having said that, overall, we might see some pockets of margin pressure because of the Middle East oil prices and the overall rise in commodity prices because of supply disruptions. So there might be some pockets of margin pressures in certain stocks. But given the traction that we are seeing generally in demand locally on the ground, hopefully the markets will look through some of those one-time things which are not really linked to a structural issue, but because of the Middle East crisis. So I think some margin pressure, some mixed bag on this quarter, but markets should look forward and look through those one-time events.
Mihir, you look at what's happening in the Nifty and you definitely think that, it's been a tough 2025. While we've recovered from the March lows, it's still pretty much a work in progress market. But if you look at the mid cap and small cap index, which we were just looking at even right now, it's, it really seems like it's in a different orbit altogether. That's where the bull market is very much buoyant. Do you sense this disconnect between what's happening within the small and mid cap universe as opposed to large caps is going to continue for some more time?
Yes, I think so. Because India is an evolving economy. It is a economy which is constantly throwing up new growth sectors and segments. The large caps typically don't reflect all the newer segments, so to say, whether it's in the new age companies or in places like transmission and distribution, defense. There is really all these EMS, etc. All these fast growth segments are not represented in the large cap index. So to that extent, it's become a bit of a boring index, so to say. And all the all the exciting stuff, all the high growth segments, you need to do stock picking in the mid and small cap segments. So I think that trend will continue.
Mihir, hi, good morning. This is Harsha. What's your sense from a risk reward standpoint at this point of time? We're trading at multiples of maybe 18 times 1 year forward with some bit of uncertainty, of course. Do valuations largely look fair on the index itself?
I think the index are poised at long-term averages. Most of the indexes are trading at 10 to 15 to 20-year long-term average levels. And we are seeing some visibility of growth. The large cap index probably will grow earnings at 10 to 12% in the next couple of years. The mid and small cap indices will grow earnings at higher than those levels. So valuations are not a concern anymore. We have seen the markets not go anywhere for almost 2 years, which means there's been a time correction, there's been a price correction, and because earnings have kept on growing, there's been a valuation correction also. And if I was a FII, I would look at the fact that we also had a currency correction. So I think we are quite attractively poised in terms of the risk-return equation as far as earnings growth versus valuations. That's only on the domestic side, us compared to ourselves. I think the bigger story, as I've been saying multiple times, is is how cheap we have become versus other emerging markets. Because in the last 2 years, the way Korea, Taiwan, and Japan and China have gone up, especially the tech stocks, plus the US tech stocks, India's relative valuation in terms of price to book multiples has never been so cheap. We are at 15 to 20-year lows in terms of price to book comparative to other markets. India, on the PE side, India always used to trade at a premium to the emerging market index. Right now, most of that premium is gone. Again, a very rare event. So I think from the FII point of view, we are underweight. They are underweight. India has become too cheap to ignore. And even a small trigger, for example, a little bit of let up in the AI hype can mean a lot of FII money coming into the country. So even from the liquidity point of view, domestic liquidity is good. FII money can come in, and a little bit of FII money can really change the equation dramatically. So I think we are well poised there.
What will drive that, Mihir? Because you've just suggested that India is one of the more expensive markets, despite the kind of
I did not
move
say
we've
that.
had.
I did not say that. Where did I say India is more expensive?
But sir, it is, right? When you're looking at some of the other emerging markets, Korea and the like, India is more expensive in relative terms.
India has always been at a premium.
That's
Long
correct.
term, if you
But-
see,
and
India
this
has
time
always
around,
been at a
there's
premium
earnings
because
growth
India
there
has
as well.
always grown faster than the other emerging markets, except for the last couple of years, where
Right.
the earnings are driven by the AI and the semiconductor theme. And that, as I said, is a theme. It's a commodity, and at some point in time, semiconductor prices will correct. So they will come back to the long-term averages. So I don't think we need to worry too much about India's valuations versus the rest of the world at this point in time.
Interesting. And maybe part of that process has already begun, Mihir, perhaps, looking at the way SK Hynix is getting battered right now in the Kospi market, looking at how Samsung's performance as well has been. Maybe these leverage trades are coming off, and one can see that in the July FI numbers here in India as well. Patchy as they may be, but at least, that vicious kind of selling seems to be behind us.
Yes, we have seen some let up in the selling by FIIs over the last few days. And, frankly, even if they stop selling, that's good enough because the domestic flows are so strong. So for the markets, even if FIIs stop selling, that's a good enough trigger. And if they buy, of course, that'll be the icing on the cake, frankly.
Absolutely. So let's talk about, India and what retail investors should be doing right now, Mihir, because, if you held through March's weakness, from March, we've done quite well, both at an index level, the Nifty that is, and of course, the small and mid caps, of course, are, pretty much in a different trajectory of an uptick. That said, what should be the strategy going forward now?
So we've always believed in stock picking as a fund house. We believe that the macro is good. We need to have a macro backdrop. We need to have a sector review, but ultimately it does boil down to stock picking. And as I just mentioned, there are so many good companies out there which are delivering good results, and to some extent they are not even linked to, say, global uncertainties or India's cyclicality. So there are exciting stocks, exciting sectors outside the benchmark, inside the benchmark. So I think India is really a stock pickers market most of the time. The macro does matter. For example, financials and banks and NBFCs are one segment where we believe there is good value emerging. There are tailwinds. Liquidity should ease out. Interest rates hopefully won't be that hawkish as far as RBI is